bonds have been steadily improving. Now, there's probably a slight delay between when I record this and when you're watching the episode, so hopefully the market doesn't make a liar out of me, but we've seen a pretty steady improvement in the bond market. Nothing huge, but moving in the right direction. And it brings us back to those lower levels that we saw in December. We broke through the 200-day moving average. We have some levels of resistance to get through at this point, kind of reaching that peak that we saw back in December. But I think that it's possible we continue to move through that. I just think that there is a lot of confidence that I would say the government, I would say Doge, I would say all of these efforts that are going on right now to push the 10-year down, right? I talked about this, Trump had mentioned multiple times his goal of getting interest rates down. Like, what does that mean? And previously had been really focused on trying to get the Fed funds rate down, which we all know he doesn't really have any influence over. But now the shift has been to getting the 10-year down. And I think investors might be thinking that he's going to accomplish that. Because if you think about it, with a 10-year yield being higher, that's good for investors, right? That are buying those long-term bonds. But if you think that they're going to drive the 10-year down, well, that opportunity to buy now and get that fixed higher return for the next 10 years starts going away. And it's kind of funny the way it works, because that demand to get into those bonds now actually drives down the price. It accelerates the price going down because there's more demand, and so they go down. So we think that that's part of what's happening here. Obviously, there's been some other sides, but what's interesting? We talked about inflation being the number one driver of interest rates, right? I talk about oil prices. I still think we need to watch that very closely. But at the end of the day, inflation is the arch enemy of bonds. As inflation goes up, bonds get worse. It erodes their value. And but what's interesting about inflation, and I don't mean this to be political, but for some reason, it's extremely divided between Republicans and Democrats as far as their outlook on inflation expectations. And this probably won't surprise you, but I thought it was a very interesting little nugget, is that Republicans think there will be virtually zero or very low inflation, while Democrats think that it will be, outrunning, uncontrollable inflation. So take that for what it is. I think obviously a lot of this has to do with all of the steps that are being taken right now, mostly around tariffs would be my guess. I think most of this is around tariffs. A lot of people believe that if we continue to use tariffs as a tactic and they go into effect, obviously some of those are just for negotiating purposes, but certainly there's going to be tariffs put in place, and that those will ultimately be inflationary. That would be a whole nother episode on whether or not that's going to be the case. But it is interesting when you look at forward-looking predictions on inflation, and we see just a completely different story between Republicans that are polled and Democrats. I just thought that was interesting. And what this tells me, and I'm going to touch on a few other points going on here, is that there's a lot of confusion out there. We're still in this kind of early stages of the new Trump administration, Trump 2.0, if you will. And what's interesting is that we're seeing very different results in the first 30, 45 days of the presidency than what we saw during the first Trump administration. Matter of fact, look at the stock market. The stock market over the last 30 days is down, where last time when Trump got in office, the stock market took off like a rocket right out of the gate, right? Bonds, bonds are, getting a little bit better, but we saw rates really drop back then. So my point is that it's not really following the same story. And so you go, well, we got the same guy in office. Why are we not seeing the same predictable outcomes in the market? And I think the reason why is pretty obvious, is that the strategies being deployed by this administration are unprecedented. We've never seen things like this before. And some people, think it's great. Other people think it's the worst thing in the world. I can completely understand both perspectives. But the reality is we don't know what the actual impact on the market's going to be. We can talk about individual impacts, and I'm not going to talk about those today, but I'm just talking purely on the market. What does it do to the stock market? What does it do to inflation? What does it do to the bond market, to interest rates, all the things that are really important to those of us in the mortgage and real estate industry? And the reality is we just don't know yet. So we need to keep a close eye on it. But I'm feeling pretty good about the move I've seen in interest rate.